Join me as I go through my detailed tracking sheet I use for all my stocks in my 200k stock portfolio. Plus, I'll show you how I know which stocks to buy and sell each month. So yeah, let's jump in by looking at the first part of my tracking sheet, which is the main overview. And before I start off, there are a few important points. First of all, there will be a lot of red in this tracking sheet. For some reason, the market decided to go down sharply yesterday, so that's why. The second point is that I'm using Google Sheets instead of Excel, as I find it much easier to get real-time market data into Google Sheets. However, this requires some coding, right? Which I won't go through in this video, but there are plenty of good tutorials on YouTube. And lastly, I removed any of my own private information from this tracking sheet and replaced it with some fictional stocks and values. So if you're new to the channel and would like to start off with an overview of the stocks that I own, feel free to check out some of my videos as well. So yeah, we're in the main overview right now. We can see all the stocks I've added here to the left, the fictional ones, right? And there are a few important principles I've used when making this sheet. First of all, I want it to be simple and easy to navigate and only focus on the important information that I need to manage my portfolio. I personally use this Swedish bank called Avanza. I think they are great, but they are missing a few important key insights in the overall portfolio overview, which I've had to add manually to my own stock tracker. Okay, so let's start off by going from the left all the way up to the right. So we have the name of each stock right here in the D column, followed by the ticker, right, and the PE ratio of each company. Normally, I don't like the PE ratio, right, as earnings of a company can be quite easily manipulated. I prefer, for instance, enterprise value to EBITDA, but I think nonetheless it's interesting to have in the tracking sheet. I also have the current price of each stock, right, and I can see the daily change of the stock and see, okay, has it gone up or down? In this particular portfolio or fictional portfolio, we can see that there's only one stock that went up yesterday, and that was, of course, Palantir, and the rest went all down. In addition, I think it's important to also keep track of the purchase price, right, of the stocks that you buy. You can see it here, right, in Swedish krona and also in the local currency of each stock, right? So if it's an American company, it will be transferred into dollars. And we have the number of shares, right, for each company as well. And we can see the current value in the local currency as well. So essentially keeping track of the purchase price and the current price of each stock, both in your own currency, if you live in the US, that's US dollars, and in the local currency of the specific company, right? And here comes a really important part, which is the percent of the portfolio. This is really important to keep track of. A big mistake many do when they start off investing is that they look just as the value, right? If it's $100 or $1,000 that you invested into a stock, that's not really that important because it depends on the size of your whole portfolio. So my recommendation is to always focus on a percentage and not on a specific value. And then to the far right, we can see the gain and the loss for each stock. And in this fictional portfolio, you can see it's gone quite well, right? Most stocks are up. We have a few that have gone down. We can see the total value of being 89k SEK and the purchase price was just 61k SEK. So whoever has this portfolio has done some good investing. Now at the very top left, I have the market value of the portfolio. Of course, that's the most important number. Everyone wants to know how much money they have, right? And we can see today's change of the total portfolio. Now this is important because this total change is currency adjusted, and I'll show you later on how important this is to keep track of. To the right, we have all the different type of indices that I like to look at. We have Dow Jones, we have the S&P 500, the Nasdaq, the OMX S30, so that's the Stockholm large cap index, and we have the Stoxx 600, right? So that's the European large cap index as well. And if we go a bit to the right, we can see the different type of currencies as well I have in my portfolio. In this case, it's the USD, right? And the Euro. Finally, at the very bottom, I like to look at the different type of totals, averages, or changes. In this case, we can see the total change of all the stocks, right? It was minus 78%. We can see the number of shares, right? And we can see the percentage of the portfolio. So this shows us that this person has not only stocks in their portfolio, they have other things as well, as stocks is only 83%. Now, of course, it's also important to keep track of all the different type of funds that you hold, right? Some of you may hold more funds than stocks, and that's totally normal. In this case, I've added 4 fictional funds in this tracking sheet. We see the names, we see the benchmarks. It's important to benchmark your fund to the right index, and we can see the change, right? Now, this is not real-time data, as Google Sheet can't input fund data as they do with stocks, but I'm using a proxy, right? So for instance, for the Vanguard ETF, right, I'm just using the percentage change of the S&P 500 for that day, and that should show us a quite reasonable proxy. And with that, we can see the change for the day of the total funds. We can add the purchase price that we bought the funds at, and the percentage of the portfolio we can see is 16% in this case. And of course, we can see if we made a gain or a loss, but the value in this case has to be updated manually. Okay, so we're taking a look at the main overview of the sheet. Let's move on to the asset overview and see what I've got over there. So the asset overview basically keeps track of where the money has come from and where the money is today. And we can see in this case, we have different type of categories. We have salary, we have a side business apparently, and we have friends and family. And for this fictional portfolio, we can see, okay, what's the values that have gone into the portfolio and the percentage, right, that constitutes. On top of that, it's important to keep track of where the money is. So in this case, we can see that this person has 200 SEK in cash. So that's quite low, right, as a percentage of the portfolio. Again, it's important, the percentages, the values are not really that interesting. It's the percentages that show us the relative size of that position within the whole portfolio. We have also equities, that's stocks, and we have index funds as well. So that's in total 100% of the current value. Okay, so that was basically the asset overview quite quickly. Let's move on to the detailed overview, which is quite interesting, where I'll show you exactly what I'm looking at from a detailed point of view. And let's start off by looking at the portfolio by sector. And this is something I don't really get from my own stockbroker, right? I had to actually make this manually. And what I've done is that I've broken down all the stocks and funds into different type of sectors that I find to be reasonable, or categories you could call them. I've added them as a percentage minus any cash. That's why it's not fully 100%. And most importantly, I can see the percentage contribution that specific sector did to the overall portfolio change for that day, right? So in this case, I can see, okay, all sectors are down, but I can see that the worst sector was consumer, retail, and luxury goods. And the best sector, at least on a relative basis, was the food and restaurant sector, only down 0.06%. And this gives me a better understanding of what's going on in the portfolio. It's not only about different type of stocks or different funds, it's about the whole picture, right? Which sectors, which categories are driving the performance of your portfolio for that particular day. The same logic, I've done the same, right, looking at the portfolio by region. In this fictional case, there is the US, we have global, and I have Sweden as the main regions or countries, you could say. And that, of course, is almost 100% minus the cash in the portfolio. And you can see the percentage contribution. For this fictional portfolio, we can see that the US was the country that dragged down the entire portfolio basically yesterday, right? Lastly, in my detailed overview, I also have the portfolio by currency. And this is extremely important if you own stocks and funds with other currencies than your own. So if you're in the US and own stocks in Europe, you really need to keep track of the currencies, right? And how are they affecting your portfolio? In this case, we have the US dollar, we have euro, and the Swedish krona. And we can see the percentage contribution. And in this case, the US dollar boosted the portfolio performance by 0.7% just by the currency, right? Nothing to do with the stocks. And the euro actually dragged down the portfolio by 0.2%. So actually, the portfolio went up by 0.5% just on a currency basis yesterday. And this is interesting, because at the top we can see, right, minus 0.45%. That's actually the sum of the stocks and the funds and the currency as well. So that totals, right, the total portfolio performance. And there you can see, is the portfolio performance in this particular day driven by the stocks or by the currency fluctuations in that particular day? And this was a huge mistake I did early on when investing. I bought a US company, the US dollar went down, and I was thinking, why am I losing money on this stock that's going up? So today I made sure to keep track of all the currencies in my portfolio and see, are they going down? Are they going up? Am I being affected by it? If I think that any of these currencies have a chance of going up or down in the coming 12 months, I rebalance my portfolio accordingly. Okay, so let's move on to the final part of my stock tracker, which is the momentum map. And this map helps me know which stocks to buy and sell each month. And yeah, here we can see the momentum map for this fictional portfolio. And this shows us the simple moving averages across different type of time frames. So we have the 200-day, 150, 150, 20, and then the 10 as well. And now you may ask yourself, what's a simple moving average? Well, a simple moving average is the average stock price over a specific number of days. So as an example, the 200-day moving average shows us the average share price of Apple over the past 200 days. And we can see where the stock is today, right, relative to that average price. Now, ideally, a stock should be above all of these simple moving averages. It should be above the average price over the past 10 days, 50 days, or 200 days, right? As that shows us as investors that this stock has momentum. It keeps going up, right? And stock price is rising. And I've basically done this with all of the stocks in this fictional portfolio. So you can see the relative, right, momentum of all these stocks, right, and see which stocks have the best momentum. In this case, we can see clearly, right, in green is Palantir Technologies. Stock price is, for instance, 50% above the 200-day moving average. Now, the worst stock in this fictional portfolio, I would say, is Lululemon, right? The current stock price is 28% below the 200-day moving average, and we can see the average of all of these time frames is minus 22%, showing us that Lululemon right now does not have any momentum at all. And this helps me quite a lot each month, right? At the end of the month, I receive my salary, and then I take a look at this momentum map and see which stocks am I interested on a momentum basis to add or reduce my positions in. I personally try to look at the companies that are not, of course, below the 200-day moving average, but also that are not 50% above, right? That shows me perhaps that the stock price on a short-term basis run up too much. The stocks that are most interesting are those that are just crossing above the 200-day moving average and above all the other moving averages as well. Now, as an example, I would say that, for instance, Nvidia is showing us, right, that this is a stock that is gaining momentum. It's above the 200-day moving average, and it's above all the other moving averages as well. I can see Goldman Sachs is showing positive signs, and I would say also perhaps Netflix. We have also Meta and Alphabet that's starting to recover as well. These are signs that showing me that these stocks are gaining momentum again. Now, of course, I would try to avoid Apple in this case. I would also avoid LVMH and Lululemon as well, as that's bright red. Now, of course, when investing in stocks for the long term, the momentum is really not that important. It's more of a short-term indicator. So that's why I've added this comment section here to the right to kind of tie the momentum with my own price targets. So I've added a few comments on the type of momentum for each stock. Now, these are just fictional for now. And I've added my own personal price targets so I can see if the stock is trading at a discount or a premium. And I can see, okay, should I rebalance this stock? Should I buy more? Should I sell? Or what should I do with the stock? So it's really important that you keep track of both dimensions. First of all, the momentum, the technical part of each stock, and the fundamental price targets that you have forecasted for that particular stock. And in this fictional case, we can see, okay, the stocks that have the worst momentum, which is LVMH and Lululemon, are the only stocks I've added as fictionally as positions I'm looking at to reduce, right? And we can see the total amount that equates to and how much you have to sell out of in percentage and in total terms in your stock account to reach that kind of rebalance target that you have in your tracking sheet. And this ties into what I think makes a great stock and what I think most people, I guess, on YouTube often missing, right? It's not only about a great business. It's not only about finding a well-priced stock. It's about also having momentum behind that as well. If you have all of these three factors, then yeah, I think you have a great investment. Thank you so much for watching this video. If you'd like me to make this as a template that you could use, please write that below in the comments. And if you have any questions at all of anything I've gone through in this video, please write that below in the comments as well, and I'll make sure to get back to you. So yeah, thanks, and I'll see you in the next one.